Right, good afternoon, everybody, and thank you for joining us. The noonday gun has just gone off in our Cape Town studio where we're based. It signals the start of our weekly webinar. My name is Neil Peterson. I'm the founder and content-in-chief of Real Estate Investor, South Africa's leading education and content platform for more than 16 years. And we are passionate about serving the South African real estate investor industry and business community through our digital platform, rei.co.za, our monthly digital magazine, Real Estate Investor, and our virtual and in-person events. So welcome to our regular Thursday investment webinar brought to you by Real Estate Investor, and I'm delighted to be your host and moderator for today's webinar. And today's topic is empowering real estate investing, unveiling profitable strategies with purpose. And more about the topic and our guest panelists a little bit later. Got some brief housekeeping. And for those registered attendees who, for whatever reason, have to leave early, could not attend today's live version of the webinar, we'll email you a link of the webinar recording. We get that request a lot. So just make sure that you go to the rei.co.za website. Under the education tab, you just click on the event replays and you select your webinar choice, and you can view the webinar at your leisure. But we will email you a link as well if you have registered. So now, before we begin with the discussion, I want to encourage all of you, our valued audience, to actively participate and interact with us. And if you have any questions for the panel, please don't hesitate to ask. To do that, you simply type your questions in the Q&A box. It's located on the bottom right-hand side of your screen. And you just submit your questions throughout the webinar, and we will pose to our resident panelists today. And we'll deal with the questions during the webinar in our Q&A panel session in the final session. There'll also be a poll questions that will pop up onto your screen periodically, where you can vote and you can select your choice, and then you submit. Right, so now let's move on to the heart of today's investment webinar, empowering real estate investing, unveiling profitable opportunities and strategies with purpose. So let me briefly introduce our two panelists today before we engage. Our first guest is Daniel Lombard. He's Executive Chairman of the CIS Group, seasoned impact investor and transformation advocate. And our second guest is Gerhard van der Westhuizen, and he's leading specialist in impactful property investment strategies with the CIS Group. Really thrilled to have them here today to share their unique insights into wealth creation and also impact investment. So we hope that by the end of today's session, you'll not only be richer in terms of knowledge, but you'll also be inspired to take action and apply these principles in your investments and your business and also in your life. So today you will see how you can make a remarkable journey from adversity, which many people are. They're facing adversity, to prosperity, into impact investment. So we'll delve into transformative solutions for distressed property owners. We'll also discover how these solutions align with your investment goals. So some of the key takeaways include gaining first-hand knowledge of impactful investment strategies that deliver above average returns. And we also explore ethical alternatives to sell in execution auctions and their positive impact on property owners. So without further ado, let's welcome our panelists to our webinar stage. So Daniel, and I'm going to tell you just to unmute yourself, because I know this sometimes people do forget. Do you want to introduce yourself to the audience first, please? Daniel, I see you probably froze a little bit, because I know there's a load shedding that's kicked in, but you have frozen on the screen. So Gerhard, what I'm going to do is I'm going to ask you to do the first introduction, and then we'll come back to Daniel.
Thank you, Neil. Yes, you're right. ISCOM is with us, and all the lights are on here. So let's continue. Thank you very much for the opportunity. I'm heading up, as you know, Wealth Assist, the planning advisory side, and we look after the investors. Our main purpose is to help our investors to get into property, direct real estate, and I think just to assist them in making it a bit more, accessible, easier. There's so much risk that people don't actually realize when they invest in property. We all are geared to assist them. And that is my function from the investor side.
Excellent. Good. And I see that Daniel has come back. Daniel, I know you briefly went out, and I know there was load shedding just kicked in, and I think you froze on the screen. But Gerhard has already introduced himself to the audience. Would you want to just introduce yourself as well? Thanks, Daniel.
Thank you, Neil. Thank you for your time. Thank you, real estate investors. And yes, I'm looking forward to share some of our knowledge. And we know that it will help you guys to obviously increase your profitability in the process. And then also we're looking forward to also make an impact while you're making good returns. So that will be our goal for today. So yes, thank you very much for your time. And I believe it will be well spent.
Absolutely. Fantastic. Great having you both here again. And really, I think it's a great discussion and that kind of thing. So first of all, I want to ask, we're going to put up the poll question before we get into the Q&A, and we're going to pop that up onto the screen. And so I think the key question we want to know from people. So the poll question: what is the most underestimated factor in making the correct real estate investment? So if we could just ask my colleague just to put up the poll on the screen, if you can just activate that, and then if everybody can just put in their vote. Is it time? Is it management? Is it mitigating risk? Is it due diligence? Or is it location? So we just want to get a little bit of feedback from you, just so that we can get an understanding exactly from your perspective. So Daniel, I think maybe a key question must be, how much time do you spend and people spend? I mean, as an investor, there's a lot of time and effort in finding the right investment opportunity. So you want to maybe just tell us a little bit about that, how much time you actually could spend and how you could circumvent that. You just unmute there, Daniel. So
thank you, Neil. Thank you for the reminder as well. It's always good.
You can leave it on now, so it should be fine.
Yeah. I would like to think about help think about your procurement, because I think that's one of the things which a lot of people don't really understand, the time that goes into it, and especially if you're an investor that find your own opportunities, and you're looking for your own opportunities to find them. You know that there's many ways to do that, and I'll spend a minute or two just on that separately, because I think that takes a lot of time if you do it correctly. Then obviously there goes time into risk management, or your risk assessment of a transaction. And your profits are mostly, with all these things that we are talking about, that takes a bit of time, or otherwise money if you use professionals for it. Then you end up on the end of the day if that's not done correctly, it reflects in your returns. Things like maintenance. We all know maintenance on its own is quite an interesting thing. If you get the wrong contractor, all those type of things. I think it's important to understand that you must get the right quotations upfront, not do estimates, because there may be things hidden which you don't know about. What is the type of property inspection that you do? The whole process of taking from the time that you actually do your investment up to the time of registration, all the processes that takes place in that. Who helps you to facilitate that? Apart from your attorneys that do the transfer, etc., your mortgage facilitation, all these things can take time if you don't use an originator, for instance, or that type of thing. It can take you quite a time longer to actually find that opportunity, fund it on the end of the day, and conclude that transaction. Then obviously the last one is when you do sales, if it's a flip or something that you have to on-sell, and you don't have the right estate agents. How do you know what the right estate agent is? Who's actually a specialist in that area? So I think those type of things actually take substantially more time than what most people are realizing. And just from a perspective of where does Wealth Assist come into this picture? And Wealth Assist from their side, they obviously negotiate with the banks. We've got ambassadors in different industries, as you can see here, typical your body corporates, attorneys, debt review companies, where we actually source these type of things in higher volumes and numbers. And that's what we do, like 24/7. It's where we find these opportunities, and with obviously a complete different approach when it comes to actually with what happens with a real estate owner on the other side, which really changes the way that we can actually procure those opportunities. And I think that's very important, because procurement, we all know, it's all about what's the price that I actually pay for it, how can I make sure that my profit is secured, all those type of things. And I think that is very important in the process.
Okay, so now we're talking about the managing time. How much time does it take to spend managing? Because, I think there's some people that like to do a do-it-yourself kind of job. And so I think we also got to look at those alternatives and say, well, how much time do you actually spend managing that property, and should you be managing it? So what are your thoughts around that, Daniel?
Thank you, Neil. I'll take this one.
Okay, right. Do you want to take it? Okay, right.
We make an investment decision, we buy it, we get transfer within 2 to 3 months. We're the owners, and we're very happy that we've got this investment. And then we plan for the long term to keep it. And the biggest risk that, in my mind, is actually bad management. If you want to lose money on the way. So there's a list of factors that you can bring into, and it is on the screen. Securing the ideal tenant, your collections specifically about with your rentals every month, payments to third parties. Specifically inspections. I can tell you now about a client who got a surprise when the tenant wanted to, vacate. They came in and there was 100,000 rands worth of losses or damages, because there was no inspections done. So there's real risk when the management on a continuous basis is not happening. We need yearly assessments of the property to make sure that the slow growth in the beginning stages of any investment property, it does not deplete by bad management. But the thing that I wanted to just stand still with is maintaining landlord and tenant relationships. In this wonderful country of ours, we know that the tenant is boss until he's proven not guilty or guilty in this instance. Human rights has taken it off, consumerism has taken it over, and you are really, as a landlord, in trouble until proven otherwise. So I think this is where our model, in my mind, is the biggest changing factor or disrupting factor, is the fact that we work with owners that become your tenant. So this is a guy that was in distress. Now we've looked at him and we assessed his risk, and we actually can assist him, and now he becomes your tenant. So we're working with people that's got a owner mentality. They've got money on the table, because our whole model is there to protect them as well as the investor. So there's real losses for them, and I think the biggest important factor is they're on this journey to recover, which means they want their credit score corrected. They want to be able to buy property in the future. So in my assessment, looking at the tenant risk is one of the major factors, and that's what makes us very much different from any other buy-to-let company in South Africa. Okay,
great. Thanks for that, Gerhard. Very important stuff. And tenant management, and also, the horrified at spending 100,000 on a property that's mismanaged. And so these are the things that we have to be aware of, that either if you do it yourself, or if you get somebody that is going to manage it, they're going to do those inspections. So how much time then is spent to do due diligence and mitigate your risk on each of your investments? Because I think, it's a time factor that's very important, because, due diligence is an important part of any property. And you just mentioned it now. You're taking over another property that could have the 100,000, which has been probably created through damages by the tenant and because it was mismanaged. So maybe you can say, how much time do you think should be spent on this, and how much time do investors spend on this to mitigate the risk of each of their real estate investments? And I know Daniel's also got an opinion on this, Gerhard, but I know you would like to also answer this as well.
On the last ones, Daniel can take it from the property side.
Perfect.
Thanks,
Daniel.
Very much, Neil. Yes, I think one of the biggest challenges that I think we experience with this type of thing is that there's sometimes we don't always know what exactly what do we have to manage and do due diligence on, and how, and I believe that we have informed investors here on this webinar. But there's always things that we don't always know about. And sometimes I think even just rushing into a transaction, we don't have the time to actually do this properly. And then we want to exit the property investment line because we have burnt our fingers. And I think that is not a good thing. But I just want to add something on Gerhard's topic there, on the previous one, and saying 50% of your transactions that you will buy will be, how good it will be 50% by how you procure and what you procure, at what price, etc. But the other 50% are made up between due diligence, management, and those type of things, which I think is very, very important. So if we look at property due diligence, we physically, you need to do a physical inspection. And I like Neil's approach always, either get to on the site or whatever the case, or have enough video / whatever you have to, or get a professional, which we do in our case, that do an actual structural inspection on that property. And obviously your compliance certificates, quotations. You can enter into a transaction, and when you actually get to it, you find out that there's some things that was not according to law and how it's supposed to be on the electrical side, and it can actually cost you, instead of your budget for 10,000, can cost you 25 or 30,000 rand later. Maintenance quotations, that these days I get helped right constantly by my team on the maintenance side, saying, no, it's far more expensive than that. What you think was a year ago, or 2 years, or 5 years ago, or whenever you did your last maintenance kind of job, and then getting the right contractor. Who's the right contractor? Have you actually looked at other work and things that you have actually done? And obviously with the new municipality laws these days, with when transfer takes place, they are checking a lot of the plan scrutiny in line with it. And any draftsman is going to cost you, for a small property, 20 to 30,000 rand later to do an as-built plan type of thing, or whatever that's. Those type of costs can eat up your profitability on that transaction. And I think that's important. Property assessments, obviously make sure that you buy the right property at the right price, comparable to not only certain things, but what's in the market, what have been sold, who are you competing against, and get it from a professional, preferably. And we do that obviously on every single transaction. We get a professional valuation, which we make available to yourself, as well as a property structural assessment, which with all photos, all those type of things, that is made available to you as the real estate investor. Then obviously we also look at the legal side of things, because we work with the owner and we're going to keep him in as a tenant. Obviously we look at various other things, which is important, but we actually ask the rights clearance. And I don't know who of you have ever burnt your fingers with that. Buying an auction or anywhere else, you will realize that when you actually purchase a property, there may be 2 accounts on that specific property with rights and taxes, etc., and usage. And if that is the case, you may underestimate what that is. We ask a rights clearance certificate, which means nothing else can be added to that. that amount that is received is what the municipality have confirmed is the full and final settlement. Same story with bond cancellations. There may be certain things attached to a bond cancellation figure. The property may stand in a surety and things like that. Then there's a shortfall and you didn't know about it. Things like that is very important. Title deed scrutiny, most important. Guys, if you buy a property without looking at the title deed, you're taking certain risks. If there may be a servitude over the property, there may be restrictions, endorsements, that you can't subdivide. You have plans to subdivide this property. All those type of things is very important in this process. Gerhard, I'll leave this last one for you.
Thank you, Daniel. I just wanted to tell our listeners that we have got a full list on a mitigating document that we would love to provide you. If you want to mail us or just ask on the platform, we'll gladly supply that to you because it is an extensive list. And the reality is, if you want to play in this game of investment, it is really important for you to do it because you lose big, as many of our clients have seen in the past. So from our model and the perspective that we look at the owner that becomes your tenant, you'll see there's so many things that we look at. Is credit report, existing mortgages, affordability assessments, credit assessment, financial risk, and most importantly, financial exit a strategy is put in place. So on our side, we've got this division called for financial wellness. And what they basically do is they look at each and every expense that is on that client. All the credit, all levels of credit is actually brought into it. And then we do after we've done a personal assessment, we actually do a budget before and after. And that budget actually shows the individual how are we able to save him financially over the next 18 months. And that is a clear picture. We show him how you will be able to afford his property in the future again. We show how you will be able to qualify for a mortgage again. And we walk that road with him. So a very important aspect of our business and support structure to the owner that came into this predicament of being in trouble with the banks, etc. And I think the investment risk research, it is extensive. I can tell you that there's a lot of money spent. The average valuation certificate report that's being supplied. The other day, I asked for a client who wanted to do a private one, 4,000 Rand. There's real money spent for us to be able to provide and take off the risk for our clients. And then internally, we've got this risk committee consisting of about 6 to 8 people. And I just wanted to list them for you so that you can understand by the time that we publish a property on the website and it's been signed off by this risk committee, you can be sure that we've looked at most of the risk because we've got our legal team there, we've got our finance team there, our maintenance team is on the committee. We've got agent specialists with all the information around the table, representatives of the owners, representatives of the investors. And if we sign off all these divisions, 100% must be signing off the deal. If one says no, it's not a deal. So by the time that we actually give it to our clients, we know that every aspect that we could think of is actually on the table and was evaluated. And if it is something that we don't like to look at, or it doesn't fall within our criteria, then we actually walk away from the deal. So I can just, from that perspective, whether you do it personally on your side with your own property, this is some of the key factors of mitigating your risk.
Excellent. I think it's such important stuff there, Gerhard, I think what you've done. Daniel, I see you wanted to add something to that as well?
Yes, I just want to go back to where we started with this slides session. Gerhard did, and we did here. Just think about the time. If you want to do this properly, you can take chances. It's not I like risks in my life as well. I'm one of those people. But unfortunately, if you want to ensure that you constantly make good decisions, make good returns on your real estate investment, the least possible being most effective. I think what we're trying to provide, that is the ask how did our poll look with regards to those that initial poll?
Yeah, look at that. The details will be, I think they were published. I don't know if we can actually get to put them up now, because I know we're moving on to the next poll question as well. So, but I think this is really important stuff, and I just want to encourage our audience over there to please, there's a Q&A box on the bottom here. This is really critical stuff. I think when it comes to real estate investing, the most difficult thing people actually have is actually, finding that investment. And yeah, we're going to get an investment that ticks all the boxes. It's been through a committee. And our next question is up there, and I see some of you are participating already. What is the purpose of your real estate investment? And I think this is a very important question. And we can publish the results when we've finished as well, please, Ashik. So these 5 options. Create wealth, that's the one. The second one is capital growth, with a specific purpose on that capital growth. The third one is passive income for the future, which will allow you, whether you're in retirement or another source of income for the future. Positive social impact. How important is that for you? And I see nobody has really taken to that one so far. And then the other one is generational wealth. So that's interesting. We could actually, I think if we could publish those results now, we could actually see. So I encourage you just to, let's give another 15 minutes on that one. And yes, so as I mentioned, at the bottom, there's a Q&A box. If you've got any questions, please do that. I think we can publish the results and publish those results there, please, Ashik, and just share that. So yeah, so we could see what those results are. Okay, so I think these are all really important questions. So both Gerhard and Daniel, I think you've really opened up the thinking for an investor, and you're actually providing them with all the opportunity in front of them to start investing here. So let's just move on to talking about social impact. And we see that, some people don't see the value, it seems, of that. But how do we align that? And maybe I think you must elaborate. And I think Gerhard is going to be sharing with us. And I know Daniel will also add to that. I'm not quite sure who's going to do it, because I know it is a little bit of a duo. But I think Gerhard in particular is going to kick off with investing for social investment. How do you align your portfolio with purpose? And maybe just elaborate exactly what does that mean? Because we've got a distressed owner, you're helping them, as you mentioned. So over to you, Gerhard. Do you want to take on that?
I think this is mine.
That's
Neil,
fine.
But,
okay.
I just see the poll as a 0% response on the social.
Correct.
Which
that's right. That's
because,
correct.
We actually wanted to put a focus on it and explain to the people how this model works and how different it is. And then the reason why we bring it up here is because I had so many clients that says to me, you know what, this is the reason why I'm sitting next to you and investing with your company. That was the main reason. And thank you very much for good returns. So Daniel, you can maybe just take us further on the next slide.
Great. Before I do that, I'll look at this poll, guys, and I've got and apologies for the straightforwardness. I'm concerned, and the reason for that is not only the positive social impact that we make, which I'll talk about now, but if we look at your capital growth for specific purpose. Okay, so if you don't want to build up wealth through this method for a specific purpose, that's normally it is a red flag. Anybody, and I think you can see this nice little dot on the right-hand side here where the arrow is. And you know the old saying, if you aim at nothing, you're sure to hit it. Okay, so we want to avoid that one. Right. We want to make sure that whatever you do in life, we know you should do it with a purpose. And if there's no goal to achieve in your real estate investments, you're probably just going to take it as it comes. But if you've got specific goals, what you want to reach, I've got a few investors that we deal with on a per basis, which Gerhard will deal a bit about later. But the whole thing is they have got a target. I want to Cape Town. I'm going to do this. I'm going to do that. This is what I need for that. This is the capital part for that. And or if I want to buy my own house, but I want to buy it in 3 years of a certain wealth to actually do that now. So I think those type of things is I'll just use the best-selling books example in the world that says do unto those which you want to do unto yourself, and I think that's important. So it's great to make a lot of money on the one side, but if you have to misuse other people's misfortune to enrich yourselves, it will come back and it will bite you. You'll sleep less easy at night and all those type of things. So I think it's very important to try, and whatever you do, always make sure that it's a fair transaction and everybody wins out of it. And that, for us, is very important. We want to make a measurable, positive social impact in the lives of those real estate owners that we do transactions with. And I think that is, there's not a lot of people in the country that actually do that, even worldwide. I think that's important. Influencing the stakeholders on the way. Everybody wins in the process. The attorneys that's used, the estate agents that we use to sell the properties, all those type of things are part of that process. And here's the big thing. Most people don't understand that if they can actually do an impact investment with higher returns, but still helping people at the same time. And I think that's what creates the lack of looking for impact real estate investment in our country. So the ways that we assist the real estate owner in our case is, first of all, we look at them, and I wanted to touch on that when Gerhard spoke about it. When we put a tenant, that's actually a tenant that becomes an owner in the future, even if it's a assist-to-own buyer or a recovery client. Both of them are so well researched that they are far more researched than any normal tenant that you would actually buy and rent a property to, far more than you would do homework on them, making sure that they actually can afford that rental and have got a bigger purpose of that specific property than just being a tenant. Second one, everybody is not able to recover. We understand that. In that case, we'll never do a recovery for them because they'll be a disappointed client, the homeowner at the end of the day. So in this case, what we will do is we will fix the property, sell it on. You make an excellent return, and at the same time, they have something fresh to start again. And I think that very important part, which you don't in every transaction. If you look at when you buy on an auction, those people's lives falling apart most of the time. We know that when financial distress comes into a home, part of the biggest reasons for divorces, those type of things. Children have to be taken out of schools. All those type of things are actually, and now you are transforming that client's life. And he actually, some of those people have actually now investors with us. So that is the key, to turn them from a impaired party to a real estate investor.
Awesome. I think it's very valid, and there was quite an interesting comment, Matt, which in terms of the option that was selected, I think some people are saying, well, look, the purpose of investment is obviously, it is building wealth, but we'll get to that discussion a bit later. I want to ask Gerhard first of all, because he's going to talk a little bit about it's social impact investing, but you're not sacrificing profit. And I think that's the key. And I think everybody thinks, well, okay, if we're going to do it that way, we're going to sacrifice profit.
Yeah, no, you're right, Neil. I think the reality is if we do, and, at our previous webinar, we actually did a comparison compared to the national averages and so on. And we'll gladly share that to the people as well. The reality is we are achieving far above the average norms in South Africa when it comes to returns. So there's absolutely no sacrifice from the investor perspective. The reality is he's getting the bonus of a social impact of saving. We always say we're not in the business of selling houses. We're in the business of saving homes, and people live in houses. So the reality is you don't sacrifice any profit. We look at people that is in many cases credit rich, cash rich, and time poor. That's actually what we're doing. We've got so many investors that are making the money, or they built this portfolio, but suddenly there's no time left. And then we say, well, let's assist you in this. So, we as a specialist team assist the people to invest in direct real estate by bringing a full team of expertise to him, knowledge, systems. We take, actually, I always like to say to our investors, remember, you never speak to a plumber, electrician, an agent, or anyone else. You speak to us, because we've created this. We even take hold when we, collect the rental and pay the third parties. We don't let anything go out of our hands. We take control of the whole process, and that is one of the keys of good property management. So our investors need a unique plan and a unique tailor-made option for them to be invested into property, and we actually provide that. So, we start this journey with our investors with a plan, a tool, a document where we put it down, and we actually create that strategy for the investor. We look at their profile, their preferences of where they want to invest. We actually draw up metrics on a national basis, price bracket, type of property investment that they want to do. And when we've got that, we actually go into the goals. So what will they be achieving or aiming to achieve? Is it capital growth? Is it only income? Is it both? By when do we need how much? That type of thing we bring into that model. And looking at the returns, it's all about numbers. We actually show the numbers. So we do a projection over 6 to 10 years, and we do an assets and liability projection for them, and also an income projection. So when you look at that one page, you can, with one view, sit and say, well, at least I can see when I will be making money, how much I will be able to. There's one investor, I always smile when he speaks. When we started off, he said, can I come down to Cape Town to retire in 8 years? And then we sat and we said, okay, maybe, this looks like 6 years. And then when we speak again, 5 years, and now he's saying, listen, I'm coming down to Cape Town because I see it will be in 4 years. And I'm going to work from Cape Town. So I love when I see this. But the reality is, if you're looking at the effort that they're putting in and our knowledge that we're adding, and the returns, that's actually a bit higher than what most people actually achieve out there, you shorten the time. And we show that in our plan for the people. And I think very importantly, on our last aspect is, we do a plan revision. There's anytime there's something move, there's a rental collection that didn't go through, we'll notify the investor. There's reporting that takes place. And then obviously the bigger picture, every year we will sit with our investor and say, are we on track? Which this plan becomes the measuring stick, if you want to call it, for progress. So we can actually see that we are there every year, making the numbers, achieving the results, or if there was well, in our case, we never lost any capital for our investors, but the reality is, there might be a bit of a deviation of what we planned for, and then we adjust our strategy for the future. So we really would like to facilitate that advisory service, even if you've got a big portfolio yourself outside of our model. We've seen that because of what we offer, people diversify into us and start to make use of the benefits that we bring to the table.
Excellent. Great. And so I'd just like to say to our audience here, this is, such important stuff. You're giving them a real guide. You're giving them assistance, step by step. And there's a lot of investors, they get, the opportunity to invest, but they don't get the proper hand-holding process to be able to go through this. And I think you certainly provide that. So first of all, everybody, questions, please fire away. I see we do have a few questions which are there, which I would like you to please, put into the Q&A box, which is on the right-hand side, the box over there, not the comments box. There was one comment which I'm just going to just discuss here with you, gents, over here. And Anthony actually mentioned, he said, guys, he thinks the primary idea is to build wealth, passive income, but doing it with social impact is the better way to do it. But he mentioned that on the poll, only one option could be chosen. So I think it's a matter of, we'd like to get both. And I think it's a pretty good comment. I don't know what your thoughts. So we know next time when we do it, maybe we should choose between making money. But I think there's a priority.
I could tell you it was a setup question. Sorry, I apologize. I said every aspect of those options are actually important and correct. We just wanted to show that we actually built this model to bring in social investment and make a change. And I always see the mother that lost the dad and the daughter walking out of the house because now suddenly they are without income because of bad financial planning, and now the mother loses the home.
Yeah.
So that's what I call social impact. When I see that, and so Anthony, you're right. You could have chosen anyone. It's correct. We just wanted to mention social impact as part of our model.
Okay, perfect. Great.
I just want to add what Gerhard is saying there, guys. It's all of the questions and the answers. Those answers are correct. What is most important is a preference, and I understand that fully. But I think what is very important on that is the fact that you can do both, and that's why most people, if you ask them, do I want to make social impact? They say no, because they are used to that you have to sacrifice profit for that. And in our case, it's not the case. And we want to really make a difference in the industry. And I want to call on you guys as investors to really start looking rather for the ones that's got both. And I think
this is income and surrounding effects.
Yeah, we just lost your last statement there, Daniel. Do you want to just probably your last, say 30 seconds? You cut out.
Yes. Okay. Yep. Okay. I'll quickly. So what I'm saying is, I said the problem is that most people don't know about investments that normally makes social impact whilst at the same time making good returns. That is the first starting problem. Then the second one is most people, because of that, are not aware of these things and are not on the lookout of it. And I want to make a call on real estate investors to really focus when you have the opportunity to actually include both. Choose those investments because there's an additional return. I always call it the unseen return. Call it karma if you want to, call it whatever you want to call it. That is the thing that's going to happen in life. Whatever you do to others will be done unto you.
Okay, so you just cut off a bit there, but that's
very, very important. And I think sure.
Okay, perfect. No problem. Okay, so just two comments. I just want to, just in closing on this one, and Mark said the answer I chose was to build passive income, but of course social impact is a byproduct of me building passive income. So both are achieved, which you actually quite correctly said, Gerhard. And Jerry made a comment, I think you cannot pour from the empty cup. Your cup must be full first. I don't know, any thoughts on that? Yeah. Okay, great. Okay, then there's another question. It's also Jerry says, are you doing sourcing for investors, if I may ask? Who wants to have a crack at that one?
I think the one.
I just want to understand it correctly. As you're asking that, he's asking, do I source opportunities for investors specifically?
Yeah. Correct, yeah.
Yes, I think there's two answers to that. One is we do it all the time for all wealth assisted real estate investors and make these opportunities pre-vetted, risk mitigated, already checked with all the information available to our current investor profiles. And Gerhard can just touch on that. And then secondly, we even select those opportunities for them when they want to invest. And thirdly, if you're an investor that don't necessarily want to go into us working a plan with us and those type of things. We have what we call our normal investors that's either registered or specifically accredited with us, so that we at least know it's people who know what they want, and they give us a list of what they want. Then we provide those opportunities to them from our side.
Yes.
Okay, perfect. Right, so who's going to take this question? It's an interesting one. And I mean, really, it's about the whole profit narrative. It's from Anonymous. He says, how is profit made from the existing owner? It's not clear how this is done. And do they take over ownership and then the distressed owner buys back? Or is the profit made on financing? Who wants to have a crack at that? Daniel?
Very simple. You purchase the property like any other property. I think that's the first question. We do use other things like alienation of land tax transactions, those type of things, but it will all be recorded on the title, or it will be a transfer of a property into your name as the real estate investor. Okay, that's part number one. So your security is the property. The client will then rent that property from you after it's verified that he can actually settle all these debts. And that's actually his question. The question is, how can you help a client that can't pay now? Okay, so the reason is you can help him because the client at this stage have got maybe certain types of short-term debt, whatever that is, coverable within the time period that you have to recover, and then only will we assist him as a tenant that will be able to transfer the property back to him at a predetermined return, which we ensure will always be 17% thereon plus net returns per annum. Yeah.
Wonderful. Good.
Okay. That addresses the question.
Yeah, we will ask Anonymous if there is a more elaborate or elaboration rather on that particular answer. And please, then let us know. There's another question. Can you elaborate on the different investment opportunities you offer and the ROI timeframes? Because I think that's important, because we spoke about, obviously, it's a profit narrative. It's impact investing, but we're making money from it. Who wants to have a go?
That is, there's basically two lines. The one side of things, the individual can be recovered. He becomes your tenant, and it is what we call a recovery product. If you look at our website, that means there is an income that's provided to the investor as well as capital growth. Investment term, on average, 24 months. The second option is where we see that the individual cannot be recovered. The property is actually not in a condition for the long term, and we call those products then that we go directly to the market on sales, or the market calls it flips, as one of our investors said to me this morning. We then immediately prepare the property to be market ready, and then we sell it onto the open market and protect the individual, our client, or the current owner, from that perspective, from the creditors. And if we need to take out the bank or any other creditors that will actually come to the party, we bring in the investor at that stage. And the focus of that investment is actually capital growth, on average 9 months. Then the returns will be paid out to the investor. So basically two types of products, but there's subdivision. Oh, and the third one, the most important one actually that was added this year, is the assist to own one, where we actually look at people who can actually be recovered with their credit score, but is unable to get a bond now, and then they become your tenant with the purpose and the option to buy the property from the investor. So also a different profile of tenant, vetted thoroughly, but we know because they've got that option, they actually pay for that option to buy it back, which means there is some skin on the table, and the profile of the tenant also changes then because of that. And then also 18 to 24 months, then the profit will be realized for the investor.
Excellent.
But I would gladly have a session with the investor to discuss in more details. But I mean, that's a summary of it.
Wonderful. Okay, well, the good news is obviously we've got another session. We actually got the banks which are coming. We're having a live event, and it's actually going to be next Tuesday. And that's going to be interesting because, we'd really like to have a discussion to, not only see their perspective, but, on this kind of thing. And that's going to be on Tuesday, the 5th of September in Cape Town. That's in Cape Town only. You can, for those who are outside of Cape Town, you can actually log in virtually as well. But we'll tell you a little bit more about that a bit later. So before we get there, because that'll be right at the end, you can just close the screen now. We can actually show that a bit later. Oh, there it is. It's actually on the screen. Decoding the distressed property market, a comprehensive discussion with the banks and everything. So we can just, if you can just close that for now, we can just show that right. We're not quite finished yet. There is a question, another one, and it's actually a comment actually, which welcomes, obviously, it says it's from Pandu, and he's from Namibia. He says the webinar is interesting. He loves the fresh perspective. And so I think this kind of investment approach is definitely very different because it's all about the money. And we saw in the financial crisis in 2009 how we greed sort of led property investing, and this is kind of a very, very different approach. Okay, so what I'm going to do is we are approaching to the end, and we've got time for a little bit of a wrap up. So what I'm going to do is ask each of you, Daniel, and to give your sort of final thoughts, and you, Gerhard, to give your final thoughts. Then obviously I'd like to invite the audience to a couple of events where you will be, or you'll be both in Cape Town and in Johannesburg. We'll play that, and we'll put up the links and everything a little bit later, and we'll put up the banners that you can actually have a look at as well. But starting with you, Daniel, do you want to maybe just give your final thoughts? I think it's been a very intriguing, insightful discussion, and I think clearly we can see from the audience engagement we need to discuss this a lot more. There needs to be more engagement, but I also encourage everybody to reach out to both Gerhard and to Daniel. So your final sort of thoughts and on this whole topic, Daniel.
Well, I think it's, if you guys go and visit the website, I think it's very important to see the type of returns, because that question, I wanted to go to the website, but was not able with all this lovely power things. But I think if you understand and see what the returns are, if you see the homework that's done, if you see the whole picture, if you actually have got the time to do all those type of things in a proper manner, and you're gonna have good investments. I can guarantee you that, and we'll help you with that. That's what we're here for. We provide a service. We're not only selling investment opportunities. That's not our job. Is we help people to actually create wealth, and at the same time, we're helping people on the other side to actually recover, keep their homes. And I think if you can get it right in any combination to do that with returns of, call it 17% plus per annum, and it's always cash positive from day one, I think that leaves time for immediate engagement. And I think the thing that Neil said, come and meet us, guys. Do it personal. Come meet us at the venue, at the different webinars, the live webinars, the ones at Cape Town is coming up now, and the one in Johannesburg as well with the Money Summit, etc. Come meet us, come meet other investors who joins with us, which already some of them are 5 or 6 years and 9 years with us, that you can ask the right questions, make sure you're doing the right thing. I think that's my wrap up from that side.
All right, thanks, Daniel. I think what's, you mentioned the 17%. I mean, that's enough to make anybody excited. And you said from 17%. You didn't say 17%, and I think this is the whole profit narrative as well. So there's a double whammy that's actually happening here. It's a pity we couldn't actually see some of your investments that you put up over there, but I think when you do come we invite you to the next event. It's on Tuesday, live in Cape Town, or it's virtual, and I think we'll do that opportunity. We'll put those investments up. If not, you can go to the Wealth Assist website, and you can actually see the investment opportunities there. But from 17%, I mean, that's a pretty decent number. So, Gerhard, do you want to...
Especially with the fact that you buy at 75% of market value, all cost inclusive, that really makes it excellent.
Okay, no, good. All right, Gerhard, do you want to give us your final wrap?
Thank you very much. I think the main message from our side this morning is that, you know, if you want to be a real estate investor, you need to spend time, a lot of time, on evaluating all the different aspects. The second thing is you have to spend the real money to actually get the right information. There's no doubt about it. And I think thirdly is you need a lot of knowledge. If it's not inside of your own mindset and experience, then get someone. And I think that is what we actually offer from Westhuizen side. We actually spend the time, the money, and bring the knowledge to the table for you as the investor to actually get involved and create a portfolio from a property and direct real estate investment per se. Thank you. So I appreciate your time and really come and make contact.
Great. That's wonderful. It's a nice way to end off the Gerhard. So Daniel, Gerhard, thank you very much for sharing your valuable insights and your investment expertise. And I think it really has been eye-opening. And I think for many people, you know, the whole sort of impact investment narrative, and it needs to be debated further and understood, I think, a lot clearer. And because there's a profit motive, it's a double whammy. And it's not often that you can actually get that, the two all in one, where you're actually really making an impact and you're really assisting somebody who's in distress and who's also getting a benefit out of it. So to our audience, we appreciate your active participation and engagement throughout this webinar, and we hope you've gained valuable knowledge and you're now motivated to take action towards your own wealth creation journey. I mean, it's not often that you can get those kind of investments which are sitting in front of you. So before we close, I'm going to talk about the next event. So maybe, you know, between you, Gerhard, and Daniel, maybe you can just pop up that the slide again. There's an opportunity to engage. This is the Cape Town seminar, and that's going to be obviously on Tuesday, the 5th of September. It's going to be from 7 o'clock onwards, and it's a live seminar, and we'll be having a discussion there, decoding the distressed property market, an open discussion with banks, homeowners, and investors will be our guests. I will be moderating it, so you can meet me there. At the address details are on the booking registration. It is a free event, people. So for those of you who are really interested, please come along and join us. And it's not only a live seminar, there will be an opportunity for those people who are out of town, who are not based in Cape Town, to be able to log in to this event virtually as well. And then, of course, there's the REI webinar next Thursday. I just want to remind about that. That's not coming up, but there's another slide up, which you'll see now, which is the Property Forum, which is in Johannesburg, which is another free event. So first of all, next Thursday, same time, 12 to 1. And that's going to be Guide to South African Property Investment Success. And we unpack student accommodation, buy-to-let, and valuations. But the one I want you to come in Johannesburg. And so that's on Thursday, the 14th of September. And you can see the banner, which is up over there. And we can see Daniel will be there. So if you're in Johannesburg and you would like to meet Daniel in person, this is the opportunity. And those are presenters over there. You can see all our experts. They're finance experts, they're valuation experts, they're investment experts. And there's an opportunity to network before the time. And guess what, people? It's all for free. Can you believe it? It's all for free. So there is a link at the bottom. If you want to register, you can go to the rei.co.za website. If you click on the book now, there's a code. It's REI Guests. I suggest if you want to come along either to Tuesday in Cape Town or Thursday, the 14th of September in Johannesburg, Sandton Convention Center. Also free event. We'd love to see you there. We'd love to engage with you live. So please, please, please join us there. It's a great opportunity to meet both Gerhard and Daniel in person. So as I said, to register any of these webinars, live events, plus others, you just find the link in the chat box below or visit the rei.co.za website. You register on the events tab and click on upcoming events and select the virtual and live event. So thank you once again to Daniel and Gerhard our esteemed panel. It was very interesting discussion. It was great insights. And to all of you for joining us, we wish you all the best on your path to success and wealth creation. Stay safe and successful investing until our next live and virtual event, which will be on Tuesday, the 5th of September, as I mentioned, 7 o'clock. We'll see you there live. And then our next webinar on the 7th of September. And then, of course, on the 14th of September, our live event, which will be from 5 o'clock up until 8 o'clock in the evening, where you can meet us all live in Johannesburg at the Sandton Convention Center. And that's all for me. And this is Neil Peterson of Real Estate Investor signing out. Thank you all once again for joining us. We'll see you soon. Thanks, everybody.